Yeah, so what's going on, guys? Sorry, I've been a little bit off with the YouTube content. Haven't posted in a couple of weeks. But to be honest, with the weekly breakdown, weekly forecast videos, there's really not much been going on in the markets. Obviously, anybody that's clued up with what's going on in the world, obviously we've got the Middle Eastern stuff going on with the wars, but we've also got the election day, which is coming out, I think, on Tuesday. So markets are going to be pretty flat tomorrow. But in all honesty, for my style of trading, it's been pretty consolidated. Like if we look at the charts in sort of the last couple of months, price has either been on a very, very slow, consolidated kind of downtrend. Most USD pairs like Euro USD or GBP USD have been kind of just trading very like consolidated daily candles down. And anything else like, I trade a few CAD pairs. GBP CAD has been very flat as well, just kind of trading in a range. And that's not how I like to trade. I don't like to trade in small ranges. I like to get in on a trend. But due to the election, there's not been many trends. Gold has obviously been up and down as well. Again, I don't really trade gold that much. I think it's heavily overtraded in groups. So I tend to kind of stay away from that because, I mean, most of the people that are in, the free group that I've got and the paid group that I've got, they're normally in 9 other different groups that are all sending out gold trades. Do you know what I mean? And I find like at the moment, especially with the new generation coming into trading, they're being hit with the most volatile pair straight away off the bat. You know what I mean? None of them even know that Forex pairs even exist because they've been straight into commodities. So I tend to stay away from gold. 9 times out of 10, people over risk on it as well. So again, do you know what I mean? There's a bit of a difference between risking 1% on gold and risking 1% on a pair. Do you know what I mean? If you're risking 1% on a pair, you can tend to have a bit more of a breathing room, whereas risking 1% on gold, you've got a very small, tight stop loss to be able to be correctly risk managing on a small account, which most of these guys have. But if we swap over to the charts, I will show you kind of what has been going on, what trades I've had over the last probably 2 weeks. I think there's only been one that I've actually sent out, and I'm still holding it. It's not really moved. Hasn't done exactly what I was anticipating it to do. But again, I'm not surprised due to what's going on in the markets. So we'll have a look over that and kind of give you my insight onto what could potentially be happening next week. So on the charts, this is GBP CAD. And you can see what I mean by the range. Yes, it's kind of continuing some sort of uptrend, but it's not, nice pushes like this. Do you know what I mean? It's kind of just consolidated, and these are all daily candles as well. So you got to remember it's taking a day to form these kind of candles. There's no real trend being continued. It's been congested for the since 16th of September. It's been kind of congested between 180 and 178, which, okay, is a 200 pip range, but it's still not right. We can head for the lows or the highs. We haven't broken out of the trends that is up at the moment. And again, I'd been looking at things on like the weekly time frame. Again, look at these weekly candles. They are pretty indecisive candles. There's no real pushes on the weekly. It's just up and down in a small range. Same with GBP USD. GBP USD, like I've said, is kind of on this slow progressive downtrend. Now, there could be a number of different factors here. Having this slow progression downtrend is something that we had here before and then initially pushing up. Then a slow progression downtrend again before pushing up. It's the same sort of thing on gold. I'll go over gold in a little bit. But this is all due to the elections. Obviously, regardless of who gets in, okay, Harris or Trump, there is going to be a lot of spending. doesn't matter who is in power, there is going to be a lot of spending. Then that means that a lot of money is going to be printed. That also means that inflation is going to rise again. So the things with inflation is things like gold should come down, but we know that gold's being backed off of, a number of different factors, stuff going on in the Middle East, the war and stuff like that. So gold has got multiple different kind of backings at the moment. But already inflation was higher last month than it was, why they did the 50 basis points rate cut to bring, rates down to try and match inflation. Inflation rose by, I think it was, I can't remember, 0.5% or something like that on USD. So there's already they're already anticipating another further 25 basis points rate cut on USD next week. So this coming week is going to be a pretty volatile week because we've got the elections on Tuesday. We'll find out who is coming into power. It would be Trump or Harris. I mean, let's hope Trump comes in. I don't really care what goes on in the US, but, Trump seems to have better kind of, people driving factors. And Kamala Harris, or whatever her fucking name is, she's been under the Biden administration for however many years. And, Biden's just fucking senile and come in and fucked everything up anyway. So let's hope that, Trump comes in and at least sorts out those things. Things with the war and stuff like that. I'm pretty confident that he could come in and, put wars to bed, which would be a good thing. But yeah, anything that happens in regards to that, we'll see whether or not the US dollar is going to increase in strength, right? It has been on a very long push over the course of the last, month or so, from the 30th of September. We've pushed from the lows of 100.500 all the way back up to 104.500, right? That is a long push, which has caused most USD pairs, not gold, but USD pairs, to decline. Now, my sort of thought process is, before the actual election day, was that we were going to sweep this high, tap back into this imbalance, and then actually start to see a retracement, right? A retracement to continue on the buy side, but some sort of retracement, right? And this is what I was banking on Euro USD, GBP USD, was some sort of retracement back up to actually jump in on a further down move. But we just haven't had that. It's just been very, very consolidated. The only trade that I have been in, and we've been in it for the past week or so, is GA. Now, I was heavily banking on the monthly last month. Obviously, we had the monthly close on, I think it was Wednesday or Tuesday. I was heavily banking on the monthly. It was looking very, very nice to close around 198. It didn't do that. It closed back below the range that we were failing to break out of. Now, looking at the weekly was nice, nice weekly push, but then last week again seemed to kind of still fail to break and close above 197. So again, it's throwing off these kind of false moves. You're looking at the weeklies, they're looking pretty bullish. You're looking at the monthlies, it's looking pretty bullish. And then it just goes and throws a spanner in the works. I mean, but we're still a decent amount of profit on this trade. I've actually closed some partials just to be safe on the, on the side of actually banking some money. But we're up 219 pips on this. Stops are at entry, all that sort of stuff. So again, it will be interesting to see how the elections affect price action on GA. But yeah, if my kind of thought process on it behind is, that made no sense. My kind of thought process behind the election day is that, I mean, regardless who gets in, I think we'll see the DXY spike. I think we will see the DXY gain strength. But then on the flip side, if there's more confidence in Trump and less in Harris, if Harris gets into office, I would probably, I mean, I would put bets on the US or the DXY dollar currency index to actually drop. But if Trump gets into office, I would like to believe that, you know, investors and stuff like that will see that as a good thing and the DXY should push. Gold, on the other hand, right? We've kind of been hovering all-time highs and stuff like that. This is why I kind of stay out of gold, because I don't like trading all-time highs, because it's just it's kind of a guessing game. You know, where is the top? We don't know. And the only trade I think I've taken is this one here, but that was just a simple, very kind of ugly-ish head and shoulders. Left shoulder, head, right shoulder, then pushed. Could have held it a little bit longer, but it was on I think a Friday, so I was just happy to just kind of get in and out before the weekend. But again, I think if Trump gets in, things like BTC, things like gold will have another rally, because there's no real reason for gold to start coming down until such time as, you know, say like the war is over, inflation starts to rise, and we start to see gold make some sort of correction. But this is the only kind of buy model that I would be looking to take, because, you know, we've had this support area for, you know, three touches here. We've got the low of the Monday, so low of the week here on the 28th of October. Also on the daily time frame, we've got, you know, we've broken through the 8 EMA. So I'll be looking for how we react to the 14 EMA. So if we retest, we spike through it and respect it. So obviously, you know, if you've watched my indicator video, I say that the EMAs can act as kind of a support and resistance. Obviously, they're meant for showing when a trend is pretty strong. You know, the wider the EMAs are apart shows that the volume is pretty strong. And I use it for position taking, you know, crossovers and stuff like that. When we have a crossover, we look for a sell model, you know, on the downside. And when they cross over on the upside, we're looking for a buy model. So the EMAs, like I said, I look for, okay, if next week we have a spike back into the 14 EMA, tap into the previous supports, then we shoot for another, you know, upside move. And I think this was based on just like the Fibonacci retracement model. So from the low to the high, 78.6 is around that weekly being swept and this sort of area being tapped into. So that is the only thing that I would be looking for potentially taking on gold. But again, it's kind of, for me, this is the first time of actually dealing with trading an actual election, because when the first one happened in my kind of trading journey, I was just learning. So I wasn't really properly understanding what effects those have on the markets. So this is where I'm being uber cautious, because again, first time doing something, I don't want to be caught on the wrong side of the fence. But again, you know, with USD pairs, I've kind of just not even been looking at sell models, and that is purely and solely because even with these daily candles, there's no real for a swing trader type setup for me to be taking any sort of sell model in this, because there's no retracement, right? A lot of swing traders, and most, I think traders in general, if you're getting in buys and sells, you're waiting for retracements, you know, lower highs to be produced for a buy model, or higher lows to be produced on a buy model, and lower highs to be produced on a sell model. And you've got daily candles like this. None of that has happened. So these have kind of been untraded pairs on a swing type basis. Yes, there's a few scalps that I've taken, and I've sort of thrown out the orb strategy. Gotta have a drink here because my throat's getting fucking dry. I've thrown out the orb strategy for people to, be getting in for 5 to 10 pips, pretty small setups, but, at least making some sort of money on a day-to-day basis. But yeah, for me, for actual swing trade type setups, there has been none, right? And being at the fact that we are low at the moment, I have been looking for some sort of buy model retracement to potentially jump in on sell models, but we haven't had any. So it's been a pretty dry last couple of months. So realistically, I think I've only taken about 3 trades in the last month. One of those was gold, which was a loss. But I normally only really take or send out 1 gold setup a month. I don't trade it like everybody else, all the pros. So yeah, I only sent out 1 last month. It was a loss, unfortunately, but I will always send out analysis, i.e. my kind of thought process on some sort of gold setup, because a lot of people do like trading gold. A lot of people do like the adrenaline rush and, regardless of the being told how to correctly risk manage, over leveraging on gold. So, the head and shoulders setup, I sent that out. The retracement of the head before the head and shoulders, I think I sent out as well. So I sent out, we had the break of this trend line, and I said from 2741 area, look for some sort of sell setup, which people did take. And then I said when I started to realize, okay, we've got left shoulder there, we've got head there. Could this be producing a right shoulder? When I started to see price come down, right, well, you need to be looking at either we are breaking the neckline and continuing down. So, breaking through this support area, retesting and then continuing down, or we respect the neckline and actually push up. We respect this support area and then we push up, which is what price did. So I said you would want to see some sort of rejectional candle off of the support again to then potentially push to the upside. I mean, anybody that's actually learning that can see what I would have indicated right there. We've got a nice bullish hammer off of the support area, okay? And within this sort of price action here, there would have been some sort of entry model that you could have taken. But even still, looking back, I know that I had this low over here marked out. This low here, due to the fact that it was Thursday Asia low. So Asia low didn't get swept on Thursday. So I had that line marked out, which is where you could have taken a sweep of Asia low on Thursday, from the Thursday, and actually get in your position there. So you could have even just set a limit order. But this is like, I don't like having to babysit people because, already there's some things going on in the Telegram space that are, a little bit frightening. There's a lot of free groups that have been shut down. I think I saw Gold Trader Mo's free Telegram group has disappeared. Switzy's Telegram group's disappeared. Johnny Mitchell's Telegram group has disappeared. And even one that I set up as an informational group, which then got taken over by Harrison, and he started using it as another promotional type group because I think I built it up to like 20,000 people, but it was purely just informational stuff on FX. That got shut down. So I think they're cracking down on stuff like Telegram groups being used for financial advice because, none of us actually are FCA regulated, so we can't give financial advice. When I say financial advice, I mean actually telling someone to buy or sell, a commodity, an FX pair, indices, crypto, whatever it might be. We can say not financial advice, which kind of, indirectly saves us, but it doesn't in some respects, because why would you post something if you weren't giving financial advice? You can say, I am buying GBP USD or whatever, not financial advice, because you are just telling people what you are doing. But if you're categorically saying, buy this now, that's financial advice. We aren't regulated to do that. But giving analysis and stuff like that is completely fine. Saying this is the idea that I have on this, you are not directly telling people that is the case. This could play out, right? So it is down to you to go in and have a look and see if, your strategy confluences align with that for you to be able to take setup, and you've got then my idea as confidence as well. So that is what I like to do. And, this is why the reason why I do it is purely and solely for shit like this that could happen. If every single Telegram group gets taken down off the map, all the private groups, the paid groups and stuff like that, what have you guys got then? Nothing. If any of you are just purely and solely relying on copying and pasting, i.e., copying what the digits are and putting them into your MT4, and this thing happens, what have you got? You've learned nothing, right? And you can no longer make money in the markets because you have no idea what you're doing. So this is why I like to bring the educational side, so that people at least can, if this actually did happen or continues to happen, can go away and go, right, well, I've learned a bit. So all I need to do now is just, I've got the foundations. I just build my house off of that. I build my trading strategy off of that. I go and do research. I know some sort of idea on how to potentially take setups, right? Because that is valuable. Copying and pasting signals is not valuable because, like I said, Telegram could get shut down tomorrow and no one would have a fucking dicky bird on how to actually take a setup. So that's what I predominantly do. So yeah, with Tuesday being on the horizon, right? If we take a look at what we have coming out on the economic calendar, right? We've got retail sales for the British pound, which looks pretty bad for the British pound. Presidential election says Monday, but I've seen other things say that it's kind of Tuesday, but I don't know. But presidential election is on Monday, the 4th of November, which is, tomorrow. So it could be a pretty volatile day tomorrow. And then we've got PMI on Tuesday. And we've got interest rate on Thursday. As you can see, look, 5%. So we were at 5.5%. And then Fed Powell came out and did a 50 basis point interest rate cut. So we went down to 5. It's now looking like there is going to be a 25 basis point rate cut. That is what the consensus says. But, like I said, consensus is just predicted. It's not actual. Hence why we wait for the actual to come out. But understand that we are already at a disadvantage, okay? Us retail traders, we have to wait until this comes out. Whereas, the banks, the institutions, the hedge funds, they've already got an idea on what the figures are going to be coming out like. If you think that everybody in the banks and the institutions are just sat there with their MT4s open, ready to click buy and sell when they see the data, you're sorely mistaken. They've already, the news is already priced into the markets. They already have some sort of idea on what is going to happen with the data, so they're already locked in. Either they're in positions or they are already set up ready for positions. Okay, so they know where the market is going to be going. So like I said, that's why I don't really tend to trade around news. If I'm in a setup and I'm in a decent amount of profit, yeah, it's fine. I'll hold it because, I'll usually be break even with my stops and, some partials secured. So the rest is just kind of right. Price action is telling me that this is going to continue, but if news comes out and, fucking bottoms out, then okay, cool. I'll get taken out break even, maybe just above, because obviously you take into account spreads and stuff, especially with news, you can get, taken out lower than where you actually had your stops took to because of, the spreads widening. So, it's calm to hold it. But if I'm not in any trades, then I will not be taking any trades around news. So a lot of the time, especially at the beginning of the month, it is a pretty non-active time for me trading because a lot of the time there is red news folder out. There are periods of time within the month where it's okay to, get into a setup or be into it or be in a setup. But realistically, you just want to be using news as, a kind of, right, I've got my area in mind. We are, say, 100 pips above that area for where I want to either take a buy or a sell. Hopefully, news either does, pushes price a little bit further down for me to be able to get into the trade, or I'm already in a trade and I'm looking to get out. So hopefully news pushes me to that final TP. And that is essentially what you need to be using news for. Do you know what I mean? The technicals are just a kind of an area of getting out and getting in. So, yeah, I mean, in perspective of what's coming up, look, I don't know. I honestly don't know. I have an idea in my head that the DXY will continue to push if Trump gets in. Again, I've got some sort of kind of just gut feeling that if Harris gets in, that people are actually going to lose confidence in the economy getting better. So therefore, the dollar is going to fall to shit because it already has done. If you look at previous price, this has been under where are we at? Daily. This has been through the Biden administration. Do you know what I mean? It hasn't really, it's kind of, just declined for the last 4 years, right? And this is due to the fact of Biden being in office, right? So again, if Kamala Harris gets in, could we see the DXY start to go, right, okay, do you know what? I'm not confident on Kamala Harris. Let's start heading for the lows. Let's start going down to, the areas of 96. Because again, if you look on, I think it is on the weekly, right, we are in some sort of uptrend right here. This is kind of a bit dodgy because we've got this low here, but it's just trying to connect the dots as best as possible. If Kamala Harris gets in, this is where we could see maybe the dollar currency start to drop down to the 96, 95 area. But it's speculation. It is just pure kind of guessing because, like I said, I don't know because I've never traded in an election. I've seen people speculate that if Trump gets in, Bitcoin is going to see new all-time highs. Again, we don't know. Like, I don't know. Same with gold. So, yeah, it's one of those. It is going to be treading very, very carefully, seeing how stuff actually reacts on Monday or Tuesday, whenever I don't know. Again, it's understanding, okay, as soon as that comes out, does the market react as soon as that stuff comes out? Who knows? So all I'm saying for the people that are learning and shit like that, please, if you are looking to take setups, maybe even just half your lot sizes or half your risk. Don't go in with your full risk, halve it, or just stay out. Tomorrow I might even stream majority of the day to see how the market reacts. But still, you need to understand that we've still got the interest rate and PPI on Tuesday and Thursday. So again, it's going to be a pretty dry one. I'm not gonna. I'll be real with you. So yeah, that's about it. Right, guys. Hopefully that has given you some sort of insight and some sort of information as to what could be potentially happening this week. Trade carefully. Trade carefully in the markets. If you are in groups, understand that maybe taking the setup isn't the right thing to do because you have got major news coming out. And this is what I'm saying to anybody that is actually learning. All these economic data kind of outlets you can have on your phone. You can download my FX book on your phone. You can be up to date on what news is coming out on a day-to-day basis. And that's what I'm saying. So, there should be no reason for you. Okay, trade's been sent out. But what news have we got today? Okay, there's NFP today. I don't really want to be in a trade an hour before NFP because the problem you've got is there's always that FOMO aspect, right? Oh yeah, but if I could be out before news. Yeah, but understand that normally with price action before big major news like NFP, price tends to be very consolidated. It doesn't really move that much. Okay, yes, you can make 10, 20 pips on gold, but is it worth the risk? That's what you've got to boil it down to. Is it worth knowing, okay, we've got an hour until news or 30 minutes until news? Is it worth the risk being involved in a trade that could potentially go the opposite way and stop you out for 1%? When all you need do is just wait. You could easily wait for price to do its thing after news and then get into a trade, because 9 times out of 10, yes, okay, there's false moves. Fridays, like I said, if there's news out and it's Friday, I'm out of the markets, because already we've got fuckery Friday. And then the cherry on top is we've got fucking news. It's normally a shit show. I had people messaging me going, oh, well, the data for, non-farm payroll was shocking, but yet gold dumped and USD pairs dumped. So how does it make sense? Again, because this is what I'm saying to you. It is, we're already on the back foot. We don't know. Okay, anybody else or any other time, I would have said, I think, yes, the data is going to come out shit for US dollar. So buy. So buy everything. Buy GBP USD, buy Euro USD. And, it probably would have gone my way. But at the moment, things are just not correlating with the given pairs that you've got in the markets. It's like I saw a TikTok the other day of a guy going, oh, if you want to trade gold, all you need to do is just do the opposite to DXY. Gold doesn't just trade off the DXY. US yields, it goes off of that. It also goes off of what's going on in, the world. The conflict in the Middle East, it's going off of that. I think there's something else as well that gold is being backed off of. The elections. And he didn't really like my comment when I commented on there. He was like, oh, 1 month. It's like, well, no, it's more than 1 month, mate, because for the last however long, gold has been pushing. Now, that isn't based off the fucking DXY. That's based off of a number of different factors. So I called him out on some bullshit, and I don't think he liked it. But yeah, that's pretty much it, guys. I will try and stream Monday, tomorrow, and I'll get the streams in on the news days this week as well, so we can see and watch news play out. But please understand, when you are coming into the streams or when you're messaging me, I completely ignore anybody that goes, any trades today, right? Because at the end of the day, if there is one, I will tell you if there's a trade that I am taking. But if I don't say that, then there isn't any. Do you know what I mean? And the most frustrating thing is seeing how impatient people are, not understanding that this isn't just a game. This isn't like are we playing a game today? Yeah, we can jump on Call of Duty or something like that later on. This isn't a game. This is if the markets are shit today, I'm not being involved in a shit market. It's just the same as I'm not being involved in a shit game. The game is shit. I'm not going to play it. So therefore, I'll go and do something else. And that's what you guys should be doing. If you are finding yourself sitting there going, oh, I need to take a trade. I need to take a trade. Put your phone down or whatever it might be, turn it off, go and have a walk around, go and enjoy the day. I know, obviously, it's not sunny where you guys are, but go down the pub, have a few drinks or whatever it might be, just to take your mind off of, feeling like you need to be in the markets, because that's the worst thing that you can be doing if the markets are shit and it's pretty consolidated. So yeah, I mean, I could wrap it on for a further, 10 minutes, but I'm not going to. But I will see you guys on stream throughout the week, and yeah, speak to you in the next one.